Good morning, this is your DealBook briefing for Friday, August 14, 2026. I'm Andrew Ross Sorkin, and for a summer Friday in August, there is a tremendous amount going on. We're going to start with the big story this morning: Robinhood's latest effort to give retail investors an entry point into private startups. Then we'll turn to another shakeup in OpenAI's top ranks, a report that JPMorgan Chase dropped Polymarket as a client over regulatory concerns, and a federal court hearing in Manhattan where Luigi Mangione is expected to plead guilty to charges tied to the killing of United Healthcare CEO Brian Thompson. We'll also cover the Treasury market, a major legal setback for the Trump administration's case against Harvard, pressure on the billionaire financier Mark Walter, a prediction market crackdown in Washington state, a controversial oil project in Greenland, a conversation with the chair of Ropes and Gray about how she uses AI, and a speed read of deals, politics, and other headlines. Let's dive in. We begin with Robinhood. Over the past year, we've reported extensively on how high finance has increasingly seen retail investors, that is, ordinary, non-wealthy individuals, as a big part of its future. One of the movement's loudest proponents is Robinhood, which has argued that Main Street shouldn't be shut out of the astronomical growth of private startups like Anthropic and OpenAI. The trading platform has now offered retail investors another route for getting into the world of venture capital, even as skeptics warn of the risks that entails. Our reporter Nico Gallegly has the details. Robinhood Ventures Fund 2 began trading on the New York Stock Exchange yesterday. The fund raised roughly $200 million in its IPO at $25 per share. Vlad Tenev, Robinhood CEO, was there at the NYSE celebrating, much as he did back in March for the IPO of Robinhood Ventures Fund I. Here's how the new fund works. It has teamed up with Y Combinator, the Silicon Valley incubator, to invest in companies that are just getting started. The fund has already invested in 80 of Y Combinator startups, in most cases with $250,000 in capital each. Robinhood will use the money raised from the new fund's IPO to invest in more startups, mostly inside the Y Combinator ecosystem. This fund debuted just 5 months after Robinhood Ventures Fund I, which has invested in later-stage startups like Stripe, Ramp, and OpenAI. Its share price has been volatile. In May it jumped as high as $74, up roughly 250% from the first day of trading, but now trades closer to its opening price of about $21. More investment vehicles are bringing retail investors into the private market. That's despite the fact that non-accredited investors, individuals with less than $1 million in net worth or $200,000 in annual income, are largely barred from investing in privately held companies. Retail investors have historically been excluded from, as Richard Berman, Robinhood Ventures Fund 2's portfolio manager, told DealBook, this tiny, esoteric, insular world. But, as Josh Lerner, a professor at Harvard Business School, told DealBook, retail investors don't always understand what they are getting into. Retail funds focused on private startups have struggled in recent years. Destiny Tech 100, for instance, has underperformed the S&P 500 by roughly 11 percentage points over the past year. These funds can also charge significant fees. Robinhood Ventures Fund 2 charges a 2% annual fee plus a 20% performance fee on capital gains. That mimics typical venture capital fund fees. Expect the venture industry to keep targeting individual investors. Retail has become an increasingly important fundraising channel for private equity and private credit funds. As Lerner put it, whether you think it's a good idea or not, it's happening. Now, let's turn to the other major tech story this morning, another shakeup at OpenAI. The revolving door at the artificial intelligence giant is spinning again. The latest exit of a top executive underscores the quick pace of changes at the top of the company, even as it appears to be making headway in revamping its business, all with the company aiming to go public next year. OpenAI said yesterday that Denise Dresser, the company's chief revenue officer, is leaving for other opportunities. She was responsible for growing the company's advertising and enterprise revenue. She'll be replaced by Dali Rajic, the former president of the cybersecurity company Wiz, which Google acquired last year for $32 billion. Dresser, who was previously the CEO of Slack, had been with the company just 8 months. Among those who have left OpenAI this year, Brad Lightcap, a longtime employee who was previously chief operating officer, announced his departure this week. He joined OpenAI in 2018, became CFO, then COO in 2022, and recently moved into a role focused on special projects before deciding to leave to start a new venture. Kate Rauch stepped down as chief marketing officer in April to focus on cancer recovery. Kevin Weil, who oversaw scientific research, also left in April. Fidji Simo, a top executive tasked with transforming OpenAI's business, left her full-time role for health reasons last month, though she remains a part-time advisor. Other departures include Chloe Backler, the company's head of ethics, Johannes Heideck, who oversaw safety systems, and Joshua Akium, the chief futurist and previously the leader of admission alignment team. Keep an eye on Greg Brockman, OpenAI's president and a co-founder, who has been taking on a bigger presence at the company lately. It was Brockman who tapped Rajic to focus on increasing enterprise adoption, and Axios notes that Brockman has been building up a team to further drive OpenAI's growth. OpenAI appears to be making strides in growing enterprise revenue, a key goal as it seeks to catch up with its arch-rival, Anthropic. DealBook scooped on Wednesday that the company's run-rate revenue from business customers in July rose 32% from the previous month. Bloomberg reported yesterday that OpenAI was on track to generate more than $40 billion in annualized revenue, double its run rate from December. But it still faces challenges. OpenAI and Anthropic have cut prices for some of their models amid a cost war with cheaper Chinese rivals. The issue has grown increasingly urgent as more companies look to trim their AI spending. Potentially unhelpful to the cause, a study from OpenAI itself suggested that employees who use AI more didn't necessarily generate more revenue. All this comes as OpenAI works toward a mega IPO, which could come as soon as early next year at what some hope will be a $1 trillion valuation. Now, we're also watching Manhattan Federal Court today. Luigi Mangione is expected to plead guilty to charges tied to the killing of United Healthcare CEO Brian Thompson. Mangione faces federal charges of stalking resulting in death in connection with the December 2024 killing of Thompson. He is not charged with murder in the federal case; those charges carry a potential life sentence. He was set to go on trial in federal court in January. A murder trial in state court is set for next month. The specifics of his plea were unclear as of this morning. Let's move to the Here's What's Happening section. The U.S. sold 30-year Treasury bonds at their highest yield since 2001 yesterday. The $25 billion offering carried yields as high as 5.22%, compared with 4.91% just before President Trump began his second term. Fears of the swelling federal debt and persistent inflation are driving up borrowing costs for the U.S. In a significant legal defeat for the Trump administration, a federal judge in Boston on Thursday dismissed the administration's anti-Semitism lawsuit against Harvard University. Judge Richard G. Stearns of the U.S. District Court in Massachusetts granted Harvard's motion to throw out the case, saying that the anti-Semitic incidents cited in the administration's March lawsuit were too isolated and episodic to show that the school was breaking the law. The lawsuit was part of a broader pressure campaign to force the university to comply with a variety of government demands on issues that include its handling of anti-Semitism and race in admissions. The move hampers the administration's effort to force Harvard to strike a settlement, though experts said the government may appeal. Another sign of pressure on the billionaire financier Mark Walter emerges. In recent weeks, he pledged his stake in Guggenheim Partners, the big investment firm he helped found, as collateral for financing, according to Bloomberg, citing unnamed sources. Walter has been seeking money to pay down loans on his insurer's books that are under federal scrutiny. This week, he agreed to sell the Los Angeles Lakers for $12.5 billion, a transaction hashed out last weekend that reflects the huge profit potential of major sports franchises. J.P. Morgan Chase reportedly stopped banking Polymarket over regulatory concerns. The lending giant notified Polymarket in October that it needed to find a new bank, according to the Financial Times. Still, J.P. Morgan has maintained other ties with the prediction market operator. In other prediction market news, a state judge in Washington barred Kalshur from most operations there. A judge in Seattle ruled in a preliminary injunction on Wednesday that the company was breaking state laws that have tightly regulated gambling since 1889. He ordered Kalshur to stop allowing Washington residents to place bets on sports, elections, politics, entertainment, and other categories, the latest legal blow to prediction markets as states enforce existing gambling laws. Our quote of the day comes from Greenland. "There are so many red flags here." That's Nadja Nathanielsen, Greenland's former Minister of Natural Resources, talking about a U.S.-British project to drill for oil on the Arctic island that's supported by Dr. Phil and Governor Jeff Landry of Louisiana. In one of the most remote towns on Earth, on the frozen crust of Greenland's east coast, an American oilman made his pitch in June. Near the very room where they were sitting, he told a crowd of Greenlanders, could be as much as 13 billion barrels of oil. His company planned to drill 2 exploratory wells, and if it struck oil, it could be a major worldwide discovery bringing much-needed jobs, loads of tax money, and relief to world energy markets. The people who attended the meeting, held in an isolated town called Itokakortormite, were skeptical. Greenland's government has pushed back the timeline for granting final approvals amid opposition from locals. But Greenlandic officials told the Times they're worried that reflexive opposition could draw the ire of President Trump. Now, our weekly Talking AI conversation. Every week, we ask a leader how he or she uses artificial intelligence. This week, Julie Jones, who leads the law firm Ropes & Gray, told our deputy editor Sarah Kessler that the firm treated time spent developing AI solutions as billable hours. Here's that conversation, edited and condensed. How does she personally use AI? It's my 5 a.m. buddy, she said. It helps me go really deep in creative matters. And it actually reduces the isolation of the job of CEO. I also use an agentic tool to create daily briefings. I travel all the time, and I had trouble staying on top of my exercise goals. So I set up an agent who sends me a reminder every night about what I need to accomplish in the morning. I say, I'm going to be in Chicago, and I'm staying at XYZ Hotel. It will recommend a running route. What has she told her employees about how she wants them to use AI? The typical increment of our pricing is a billable hour. Everyone feels like you have to be really busy, and I understand that mentality. So we needed to open time for people to experiment. Last fall, we announced that you could bill time developing AI solutions for clients. Even though that's not billable to our clients, we would treat it internally in the same way. That, I think, inspired a lot of people. What are some client problems they're solving with AI? On acquisition projects, it's about, how can we get sharper analysis faster? We've been developing tools to help clients do quick dives to make go/no-go decisions. We're partnering with a frontier lab to develop what we describe as a first-pass review. Another example is management equity plans. We developed an end-to-end tool that helps take the goals of a client's incentive equity program and create the master plan. There are generally available tools, but what clients want is a law firm that knows them really well. To take a tool and use the specific client history and make it bespoke. Now, the speed read. In deals, the investment firm Silver Lake is said to be in talks to buy Workday, the human resources software provider. A deal would be among the largest software-leveraged buyouts ever. Thrive Capital, the investment firm run by Josh Kushner, is reportedly pursuing the sale of another minority stake as its funds grow from bets on artificial intelligence. In politics, policy, and regulation, President Trump and Elon Musk have reportedly mended ties, with the SpaceX chief signaling that he plans to spend at least $100 million to help Republicans in the midterm elections. A federal trade court allowed the Trump administration to impose tariffs on cheap imports, upholding the suspension of the so-called de minimis exemption. Best of the rest, Alfonso Fangel Jr., who rebuilt his family's Cuban sugar business in the U.S. and made it an even bigger empire, died on August 3. He was 89. The patriarch of a family that lost one of Cuba's largest sugar businesses in the Revolution of 1959 and fled to the United States, where, thanks to pluck and government price supports, they built an even vaster empire. A billionaire who called himself a farmer and lived a luxurious life in Palm Beach, Florida, where he docked a 95-foot yacht, Mr. Fangel was co-chairman and co-CEO of Florida Crystals Corporation. Investors in Wondermind, a mental health startup, sued Selena Gomez for fraud, accusing the actress of failing to deliver on promises to build and promote the company. And a Wall Street Journal investigation, inside North Korea's operation to conquer the American job market. That's your DealBook briefing for this Friday, August 14th. We'll see you tomorrow. If you have thoughts or suggestions, email us at dealbook@newyorktimes.com. Have a good weekend.